The majority of a billionaire's wealth lies in the companies they own, in stocks, or in real estate and other assets. John Rockefeller, the world's first dollar billionaire, rose from modest beginnings to become the founder of Standard Oil in 1870. He was one of the most successful American businessmen of all time. He became the world's first billionaire in 1916. He invested $2,000 in the business. Of these, he borrowed $1,200 from his father. In 1937, when Rockefeller died, his net worth was estimated at $1.4 billion. He would have had a net worth of $418 billion in today's dollars. We can learn many great things he said about building wealth. The lessons themselves are fundamental and can be applied to any time or situation. Keep a close watch on movement of money. At the age of 7, Rockefeller earned money from his neighbors by raising turkeys, selling potatoes and candy. Then, following his mother's advice, Rockefeller kept a journal of all his expenses, which he called Ledger A. He entered everything to the last cent, how much, and for what he received, and for what he spent. These are analogues of the modern cash flow statement, one of the tools that are used to record the finances of a business. He kept the habit of writing out all his expenses until the day he died. He grew up in a poor family. His father was a traveling salesman and self-described botanic physician who frequently traveled around the country. While the head of the family was away and didn't have much income, Rockefeller's mother had to save money, and she inculcated in her children a habit of counting every cent and taught them how to be thrifty. By the time he was 12, he had saved $50, about $1,400 in today's money. Following his mother's advice, he loaned his $50 to a local farmer at 7% interest, payable after 1 year. About the same time, he received $1.12 per 3 days of backbreaking labor, 10 hours a day, digging potatoes for a neighbor. On entering the two transactions in his ledger, he realized that his pay for this hard work was less than 1/3 the annual interest on his $50 and resolved to make as much money work for him as he could. Since childhood, Rockefeller has seen how money accounting helps them grow. His parents wanted him to go to university, but Rockefeller preferred a commercial college and bookkeeping courses. At the age of 16, he got his first job as an assistant bookkeeper working for a small produce commission firm in Cleveland called Hewitt & Tuttle. He soon impressed his employers with his seriousness, diligence, and love for numbers. The tradition from early childhood to take into account every cent Rockefeller's heirs are still kept today. Rockefeller taught this to his own children, those to his own, and so on. Several months before his 20th birthday, Rockefeller went into business for himself, forming a partnership with a neighbor, Morris Clark. To start the business, Rockefeller and his partner used savings, borrowed money from his father, and got a bank loan to pull together $4,000, about $100,000 in today's money, and formed Clark and Rockefeller, commission merchants in grain, hay, meats, and miscellaneous goods. At the end of the first year of business, they had grossed $450,000. Making a profit of $4,400. He said, "Business came in upon us so fast that we hardly knew how to take care of it, and in the first year our sales amounted to $500,000. If Rockefeller hadn't taken the amount missing to enter the business from his father, most likely he would have worked all his life for hire." Rockefeller's style was very precise and calculated. He was not a gambler, but a planner. He would go to the banks and borrow large sums of money to handle the shipments. Borrowed funds were a constant companion of Rockefeller's business. He preferred to sell shares to the next investor, even when his own funds were enough. He also invested his own money, but also kept it as a reserve. And even if there were no investors, he took the financing of the next project entirely on himself. Already owing a lot of money to his father, who gave not just a loan, but at 10% per annum, Rockefeller borrowed the missing amounts where he could. It wasn't easy, but he managed to borrow and always borrowed wisely. Rockefeller has always been careful in fulfilling obligations, including financial ones. No matter how difficult it was, and in the first years of business, these difficulties were constant. However, he always found the required amount by the required date. In his memoir, How I Made $500 Million, Rockefeller recalls how his father came to his office for a loan payment at the most inopportune times and stressed that the money was desperately needed. Rockefeller, too, finds it challenging to determine whether it happened by accident or whether his father did it on purpose for educational reasons. In any case, he paid each creditor what was due when it was due, including his own father. Over time, at one word from Rockefeller, the bankers fearlessly shoveled for him the entire contents of vaults. The best guarantee was his track record in financial matters. Besides being a founder of Standard Oil Company, Rockefeller was a real estate mogul. Allocating his wealth into real estate have created the necessary diversification and ensured the stable dividends from his investments. The buy and hold approach to owning assets is key to the success of the founder of Rockefeller dynasty. The Standard Oil Company was founded by John Rockefeller together with his brother William and a few others. Unlike John, William didn't hold on his stock and sold his share in order to finance the construction of his home instead of taking out a mortgage. John, on the other hand, decided to hold on, which eventually made him the first dollar billionaire. John Rockefeller has always praised the real estate as an investment because the time is on your side with real estate. Unlike with other investment classes, real estate investing can be acquired even when you are in doubt, and you can hold on to it for as long as you want. Furthermore, in 1911, the U.S. Supreme Court started a legal case against Standard Oil Company, accusing it of building a monopoly. This is when the second time the buy and hold approach has rewarded John Rockefeller. Standard Oil had lost this case, thus deciding to split the company and to create 33 independent subsidiaries. This has benefited Standard Oil immensely, boosting the wealth of the John Rockefeller, who held 1/4 of shares in the old Standard Oil Trust and 1/4 of the new Standard Oil. Plus, they created subsidiaries. When the legal case was unfolding, the Standard Oil founder didn't lose his calm and never rushed selling the shares, rewarding him eventually. He saw an opportunity during the crisis. The 1873 and the 6 consecutive years after that were difficult for the U.S. economy. The stock market has closed temporarily, and the oil cost less than water in some places. Rockefeller used that crisis to buy out competitors. Besides that, the world-famous Rockefeller Center and the major tourist attraction of the Big Apple was built during the economic downturn, the Great Depression. The son of the first American billionaire, John Rockefeller Jr., has financed the construction during dark times between 1931 to 1947. The building at 30 Rockefeller Plaza is the symbol of economic success and have changed the image of Manhattan forever. Until today, this is famous and demanded commercial real estate. Don't lose hope during the economic downturn. This is also a time of an opportunity. Make sure you keep building your wealth even during the crisis, but make sure to diversify and choose assets with a long-term appreciation perspective. Real estate is a tangible and durable asset, which helps to invest for the future.